London, I'm Guy Johnson with Vonnie Quinn over in New York. This is Bloomberg Markets. Vonnie.
Time for Futures in Focus now. No better time to look at oil futures than now, with President Trump's tweet just a few moments ago, followed by the report out of Saudi Arabia that it's now looking for an urgent OPEC Plus meeting. Joining me over the phone is Bill Baruch of Blue Line Futures. Bill, Brent is at $29.03. All of a sudden, WTI is above $25 a barrel. We're seeing a massive, massive rally on what the president is calling a hope and expectation that there'll be a 10 million barrel decrease. How much do you place in the president's words? Will Saudi Arabia and Russia agree just because the US president wants them to?
You know, I think there are going to be a lot of details to iron out here. And, you know, ultimately, I was talking to our clients earlier today that we could see a move towards $30 upon some headlines. And I think that's going to be a fade the rally opportunity. Markets move very quick. And if you're not acting right now, you may miss that opportunity. I think there's a lot of resistance at $28 and just below $28 that we're testing into right now. I would really want to see these details. I want to see this play out. I'm not saying oil can't get back above 30 here in the near term, but without a drastic change to the current landscape, that includes at least a 10 million barrel per day cut by OPEC, we're not going to see this thing rally and hold out above $28. So for now, I think there's an opportunity to fade this, but I'm open-minded to what could develop here.
So you're saying sell, not buy. We're not going to see $30 now. Is that what you're saying?
I think given what we know right now, which we don't have a lot of details here, given what we know right now, I think this is a fade the rally opportunity. If we get further details on this and we get confirmation that there's a 10 million barrel per day cut, we understand some of the details that OPEC irons out here, then we could see $30 tested. I think that this market in general has a lot of headwind. What is the demand going forward? And again, a lot of the hard data remains to be seen. I mean, we're getting jobless claims today, and really the jobless claims are going to allude to how poor and how dismal the data will be that we get in April for March and we get for April in April. So I think, again, there's a lot of question marks out there.
Yeah.
As everybody knows, 93.5% of all air passenger travel is down. There's lockdowns around the world, and there's a lot of uncertainty out there. And so I just don't know what the demand structure is going to look like 30 days from now when we have some more certainty behind it.
So these clients that you spoke to today, Bill, and others, what's your best trading idea for them right now?
We're looking farther out. We're getting some exposure in gold and silver. You know, and that's on the futures side. I think we're going to see a bit of a commodity revival here with inflation. I think crude oil will benefit from that down the road. I don't think so much in the near term. So I do think gold and silver will trade very well in the back half of the year. And that's on the future side. And then on the portfolio structures that we do manage portfolios as well. And then it's about what you're protecting. And yesterday or the last day of the quarter, we cut all of the REIT exposure there. I know that's not futures, but I think it's continually to manage what you have in the market, continue to be open-minded and digest the data as it comes out.
Bill, thank you. Bill Baruch of Blue Line Futures. This is Bloomberg.